Hi, thank you for joining me. And yes, I'm starting 11 minutes early than my normal 7 p.m. Eastern. It's October 24th of 2018, and it is Wednesday. Work is work is work, right? We're always busy. So we're going to get started with this training so I can get going and doing things because life is always coming at you. It's always exciting. So let's open our screen share so you can see what we're doing and what we've been doing. And there it is. So I'm working with NZDUSD, New Zealand dollar and US dollar. This trade started in June of 2015 and it went in as a buy at a 0.01 lot size, keeping it as low as possible for anything that can take place, drawbacks, breakthroughs, and all the rest of it. So here we go. The entry price on this one was 0.68310. The stop loss is literally at 7,000 pips. Go back into the 4-hour chart. See, as you can see, it's 7,000 pips or $70 negative. And that is the lowest, the most I will lose on this trade. That's why it's a stop loss. My take profit is at 0.75310, which is also 7,000 pips or $70 profit. Now that profit can change whenever I want it to change. I do not have to stay in until my take profit is finalized if I don't wish to. Being a long-term trader, being in this trade for a good 5 months, obviously I'm in long term. So I know what's going to take place with this. Granted, you can see that we are currently at a negative $31.14. And just yesterday, what it looks like to be at 5 p.m., it was a negative $28.70. Don't worry. I told you this was going to take place, and I'll show you how. Many people have asked me why I don't put in more than one position, especially when this takes place. I could have easily put in a sell, right? Wrong. With this broker, they have what is called a first in, first out rule, an FIFO. So the first entry price you put in needs to be pulled out or closed before a second or a third or however many can come out. So it doesn't help you any. It literally destroys your margin level. Most margin levels, most brokers will say, oh, you can go to 100% and not have any worry. I wouldn't advise it. I try my hardest to keep my margin level over 4,000. So I can go long-term trading with very little risk. The reason I have the same stop loss and take profit is 1-to-1 ratio, risk to reward. Keeping it minimum, keeping an eye on my margin level, knowing I have a balance of 949.48 because yesterday 4 pennies were taken for the broker fee over 24 hours. It's not that big of a deal, and it doesn't hurt. Considering I've been in this for a long time trend, and I've lost 52 cents. Not that big of a deal, right? Not when you look at the profit to the stop loss ratio, the 1-to-1 ratio. Now, many people have asked me why I stay in the day time chart and not go into the smaller time charts. Well, Going into the minute time chart, there's not much here. Not much can be done. Not much can be seen. It's got my interest, but I cannot tell you where to put things that need to be here without any indicators, without any trend lines. And that's what I use, because I have an issue relearning them every single day after sleeping and losing them while I sleep through the seizures I have. So I lose all my memory. I have to relearn everything every single day. That makes every new trade, every new indicator, every new whatever that happens feel like it's happened for the first time. It's exciting. And that's how I look at it. That's how I keep going. So being in a minute time chart, it's not very smart in my point of view, because I am a long-term trader. Going into the 5-minute time chart, there's a little more information, but still there's not a large amount. It only goes back a week. So in my opinion, and everybody has their comfort level, but in my opinion, trading on the smaller time charts is just extremely risky and more chance of losing than winning. And it's not really a loss, it's a lesson that you can adjust to learn to continue on. A 15-minute time chart, there's more information, but I'm still kind of wondering where the stop loss should be, where the entry price should be, where the take profit should be. Without any indicators, it's very difficult to see that. And I am actually looking at a naked chart. Without the indicators, that's what that kind of chart's called. Going into 30-minute time chart, once again, we've got a little more information. Don't get me wrong. There are many traders that trade in the smaller time charts without any issue, but they always mark up their chart. They always have certain rules they follow. They always know the indicators, and it's all there for them. They don't have to worry about seeing where it's going or the trend or the pattern of a trade, because they can already mark it up. It's not that big of a deal for them. So they have no problem trading in the smaller time charts. Myself, it's just not in my comfort level. And I like to have a life. I don't want to have to be staring at a chart 24/7. Or, I'm sorry, 24/5. And I'll explain that in a moment. The hour time chart, there's more to be seen, and many can do just fine right here. No problem. Then, okay, let's liken this to a movie. In the first hour of the movie, you've got some information. You know what's going on, but there's always a surprise. There's always a twist. And that's what a trade will do. It will always give you a twist, something you do not expect to see happening. Going into the 4-hour time chart, now I will be honest with you. I was in the 4-hour up to about 2 months ago. Then I realized I wasn't getting the full picture of this trade. I wasn't seeing it all. And that's when I moved into the day time chart. And sitting here at the day time chart, I can see the patterns this is showing. Granted, last night we were at a negative $28.17, and currently we're at negative $31.24. But don't worry, because if you trade in the market, you trade right, but you look left every single time, because the trade will tell you the trend, the head and shoulders, the support and demand, if it's going to break through, if it's going to have resistance or anything. So when you are in a trade, You start where you're currently at, but you go all the way back to the last time it was in this area, which is right about here. That is a little too close. So go back a little bit more, and you can see the pattern where it tested the resistance, it retest and retest and retest, and then it turned. So with it coming back down, I go back a little bit further, and I can see that I'm okay. I'm not going to have a problem because my stop loss is so low, there's no issue with something happening. And I can see that it is going to retest and retest and do a head and shoulders and do an inverted head and shoulders. But it will go up because trades always repeat themselves. Always. With that being said, I'm going to stop my screen share and see if there are any questions. Going once, going twice, and gone. And thank you for joining me today. I have another meeting I have to rush off to, but I want you to go and have a fantastic remainder of Wednesday, or remainder day or night, depending on where you are when you see this. And I'll see you tomorrow. Bye for now.